What's up, guys? Rob Wilson here. It's a special holiday Money Monday, and there are 3 reasons why I think you should be happy on this President's Day. First of all, most of you guys have the day off, even though you might not really know or care why we celebrate the holiday. No worries, take this time to relax, rejuvenate. Just make sure you're ready to get back out on tomorrow. Second of all, Jeremy Lin just saved the stock market. For those that don't know, Jeremy Lin is the New York Knicks point guard who burst onto the scene a couple of weeks ago after playing college ball at Harvard without a scholarship. You know Ivy Leagues don't offer scholarships to athletes. Going undrafted in 2010 and being subsequently waived by several teams. All he's done in the past few weeks is lead the Knicks on a 7-game win streak, outscore Kobe Bryant in a win against the Lakers, and become the first NBA player in history, that's right, the first in history, to score at least 20 points and have at least 7 assists in his first 5 starts. Not bad for somebody you never heard of 2 weeks ago. Needless to say, Linsanity is taking over the media, and while Jeremy might not have exactly saved the stock market is up almost 1% since he cracked the starting lineup, and last week the Dow Jones hit its highest level since 2008, and the Nasdaq hit its highest level in 10 years. Coincidence? Shares in the owner of the New York Knicks, Madison Square Garden, hit an all-time high at 33, and the shares are up 10% since Lin started receiving major playing time. So whether or not you're a fan of the New York Knicks, you might just want to start rooting for Jeremy and hope he keeps playing well, and maybe the stock market will keep going up too. Speaking of all-time highs, Apple shares also hit their all-time high at $500. Now at $500, one share of Apple costs roughly the same as an iPad. Which begs the question, if you've got $500 in your pocket right now, what should you do? Buy some stocks in Apple or some other company, or buy an iPad? Well, to help you answer that question, let's put this in a little perspective.
So let's say this is your choice. You've got the iPad and you've got shares in a company like Apple. The iPad you can buy for $499, and one share of Apple you can buy for about $500. But where are you going to get that $500? Well, today, if you're going to buy a share of Apple, you've got to go in your pocket and come up with $500. But let's take a look back 10 years ago. 10 years ago, the iPad didn't exist, but shares of Apple did. And at that time, they were only trading for $11. So if 10 years ago you had went into your pocket and bought one share of Apple for $11, today they'd be worth $500 and you could go buy your iPad. And just think of if you bought 2 shares, or 10, or 100. Think about what you could buy then.
Now don't take this as a recommendation to go run out and buy Apple tomorrow, because it may or may not be right for you based on your personal financial situation. But you can always schedule an appointment with me to discuss that in person. Shameless plug. The point here is that if you're one of those people who always come up to me and say you don't know that much about investing, if you stick with companies you know, products you buy, and places you shop, you probably know more about investing than you think. But guys, if you're really looking for a way to start learning about the stock market and investing, then I want to remind you guys to sign up for my March Money Madness Bracket Challenge.
Here's how it works. If you're familiar with college basketball, then you're probably familiar with the tournament that happens every year, affectionately known as March Madness. During the tournament, millions of people actually fill out brackets where they'll try to predict the winner of each game and eventually who the national champion will be. So what I've done is taken the March Madness bracket and turned it into the March Money Madness bracket. So instead of having a bracket full of basketball teams like Michigan, West Virginia, Butler, and Duke, I've got a bracket filled with stocks like Apple, Nike, McDonald's, and Verizon. Now the game between the stocks occurs during 1 week in the real life stock market. Whichever stock has the highest return during that week wins the game, and so on and so forth until a champion is crowned. And you can go to marchmoneymadness.com right now and register to play, and you can even use your Facebook login to do so.
The selection show, where I'll list out all 64 stocks involved in the challenge, is on March 1st, and gameplay begins on March 12th. There's a $5 entry fee to play the game, but the grand prize winner will walk away with 50% of the total entry fees. So tell all of your friends, because the more people play, the more you can win. The game also works in a round-by-round format, which means you'll make your picks before each round of the tournament rather than having to make all your picks up front. This means that if all your picks in round 1 were terrible, you still get to start fresh in round 2, and that means that anybody can win. So after the 6 weeks of March Money Madness, you'll know a lot more about the stock market and investing, and hopefully you'll have some cash and prizes in your possession. Once again, that website is marchmoneymadness.com. That's it for this Money Monday. Enjoy President's Day, and I'll see you next week.